Hello and welcome to another daily market update by Market Intel. My name is Ben and today we want to take a look at the ADA chart. We usually do that on a Friday, and ADA, or the Cardano chart, is one of the most popular charts on this channel. I see it when I look at the views of the different videos. So I think you've been waiting for another update. So let's take a look at the chart. Let's go. So we are now on the Market Intel website, dailymarketupdate.com. Here we navigate straight to our cryptocurrencies section. You can register here completely for free. The link is in the description, and then you can get access to all of these updates. We also updated Bitcoin, Ethereum, all sorts of other coins here, previous altcoin updates. And today, however, we want to take a look at the ADA chart. We want to see if there is any update, any change to the chart. For everybody who's new on the channel, I think it's always helpful to take a look at the long-term chart first. Looking at the ADA chart, looking at the bigger picture, we can see that we're tracking a 1-2-1-2 setup. Major, let's say, breakout point or key level on this long-term chart is still $2.51, and the minimum expectation long-term in a third wave rally or for a third wave rally is the $5.27, $5.28 level. That is one of the key Fibonacci extensions here relevant for a third wave. But please note, because this is a so-called 1-2-1-2 setup, once this third wave is done, there should be a wave 4 and a wave 5 of a larger degree third wave and another 4-5 pattern. So there is a lot of room for growth. Of course, is any of that guaranteed? Of course not, right? If anything was guaranteed in the financial markets, we wouldn't need to manage risk. So of course, everything is related to probabilities and based on a current assessment of the chart. If certain things happen, those bullish outlooks will have to be revised. And now let's take a look at the shorter time frame, because on the shorter time frame chart, we can see what needs to happen for us to have, to reinterpret the chart. So when do we have to reinterpret the chart? When do we have to think about more bearish options? So let's take a look at the shorter time frame. Here, on this smaller time frame or shorter time frame chart, you can see that there is a red line. This key level at 22 cents is a formal invalidation point for the scenario and the idea that this is a 1-2 setup and that this larger degree wave 2 bottomed in June last year at around 22 cents. So current idea is that magenta 1 topped in March at around 81 cents, 82 cents, sort of in that area. Price range there can always differ a little bit depending on which exchange you're looking at, whether you're looking at the futures charts or the spot charts. So, it's not so important. What is much more important is the formal invalidation point down here. So if we get a sustained break, or really any break below that 22 cent level, the 1-2 setup here is invalidated and the chart would need to create another setup. At the moment, the idea is that a 5-wave pattern to the upside formed between June and March. So June last year and March this year. You see this as a 5-wave move up in an impulse. The move down is considered a wave 2. Do we have any clear reversal signal to the upside? Not really. In the last video, we already asked the question, is this now the breakout that we've been waiting for? And the answer was sort of, we need more evidence. Okay, we need more price data. We need a first 5-wave move up from the recent low that we are counting it as complete. Well, that is not really confirming the move is complete. Yeah, the minimum requirements to the downside absolutely fulfilled, right? This is a corrective pullback. It's definitely deep enough. It's nearly too deep already. But there is no low in place until we see a first 5-wave move up on a smaller time frame. That would be followed by a 3-wave corrective pullback forming a higher low. It's just not there. Okay, so you might see this, but the structure from that low that formed recently in August, that structure to the upside is just choppy. It's corrective. It's overlapping. Not enough evidence that a low is in. So I think we need to consider the market might do another low. It might even test the 22 cent level. For now, we're placing the wave 2 low here because, we're just waiting to see if the market has the, let's say the power, and the market can generate the momentum to turn around to the upside. As soon as we see the first smaller time frame, smaller degree, 5-wave pattern to the upside, it would indicate that the trend is now up. Then we can add the next support area to the chart. Bit too early for that. So all eyes need to be on the 22-cent level at the moment, and to the upside on the 81-cent breakout point. So that's the update about ADA. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in additional updates, yeah, register on our website completely for free. Also, let me know in the comments which other cryptocurrency or stocks chart you want me to update next week. And don't forget to activate the notification bell. Thank you very much. Bye-bye.